A big welcome to all our panelists, and thank you very much for your time. Really looking forward to getting your insights on the insurance industry in this current weird normal, becoming next normal or new normal. And we'll understand that a bit more when we hear from you guys, particularly in the context of insurance within the health environment. A big warm welcome to all our attendees. The numbers are growing. We're expecting a couple of hundred people at least today. So it's morning for me because I'm sitting in Basel in Switzerland. It's afternoon for everybody else on the panel. This is our weekly Together Apart series. We started this series many weeks ago as COVID started growing in stature in terms of its presence in our minds, but also as it started impacting the ecosystem. We see this pandemic, as we roll out of the pandemic, certainly now, as having placed a significant spotlight on digital health, as almost being kind of a perfect storm for digital health, not only a storm from perspective of the impact on investors, the impact on industry, the impact therefore on entrepreneurs, but also an opportunity to demonstrate how digital health is a significant solution really to addressing many of the health system inadequacies that have been seriously highlighted during the process of during this pandemic. And so we have run a series of webinars allowing us to dig into industries, dig into countries. And so for those of you who've been with us for the past few weeks, you've had the privilege of listening to CEOs in many of the countries around Asia Pacific and how they're weathering the storm, how they've reacted to the COVID-19 impact, and I guess how they're making a difference at a patient level, either directly or indirectly. We have spent some time listening to industry leaders in the pharma industry, for example, and seeing how they're weathering it. And so today, it's a great privilege to listen to leaders in the insurance sector in Asia Pacific and how they're witnessing, weathering, and adapting to the pandemic, as I said, as we are in this sort of weird normal moving into a new normal. I'd like to introduce Matt as our moderator. Matt has joined the Galen Growth team reasonably recently. He is our global partnerships lead for the insurance sector. He comes with a strong pedigree within the insurance industry. Some of you will probably know him anyway from before. If not, welcome to Matt. Matt, I will leave you to introduce your panelists, but it's over to you.
Great, thanks very much, Julien, and very excited to be here this afternoon talking about insurance, a subject that's very close to my heart. And it's perhaps just worth 1 minute just to think about insurers and where they play within the health ecosystem, an incredibly important part of the ecosystem. I was reading this morning that the first ever life insurance policy was made way back in 1706. And now, of course, across Asia and beyond, millions and millions of customers are looking to insurers for health protection and health coverage, often to supplement maybe inadequate universal healthcare, or in the case of, say, Singapore, where there is quite good healthcare to supplement that. So, really key role to play there. Partnerships. Looking at our HealthTech Alpha this morning, there are over 40 partnerships, significant partnerships that insurers have done over the last 2 to 3 years. So very active. We're going to hear from Ryan in particular a little later about how he's approaching thinking about investments. From what I can tell from our analysis, the big areas are disease management, wellness platforms, and telemedicine and teleconsulting. And of course, we've seen that that's been a big theme coming from COVID over the last couple of months. And the last area is just as technology buyers. In 2019, according to Gartner, insurers spent a staggering $200 billion on technology. So really big technology customer for many in the ecosystem. So our panel really reflects the diversity of the role that the insurers have. So we have reinsurance represented from Raimondo. We have investing on the corporate VC side from Ryan. And we have health strategy from Isabella and Antony. Isabella's from AIA, Antony from Manulife. Just before I hand over to the panel to tell us a little bit more about them and some of their background and where they're from. Q&A, we have what we hope is interesting topics already to discuss, but we'd love to hear your Q&A from the audience. So please drop the Q&A in the appropriate Q&A button at the bottom of Zoom. I will endeavor, as we get probably halfway in, to start looking at the Q&A and taking some from there. Just a note to our panelists, we will sort of go round one by one, but it's great to make this a conversation. So if you do have a question or you want to add something, just raise your hand and we'll come back to you. So with that, I think I will hand over to our panel to hear a little bit more from them. I'm just going to go in the direction that I've got my Zoom here. So Ryan, can you tell us a little bit about you and where you're from?
Sure. So based in Singapore, as you can see from the lovely fake scene behind me. No, it's a real scene, but obviously it's not where I'm sitting. So I'm at MassMutual Ventures, based in Singapore. We're a global VC that was set up just over 6 years ago, in 2014, originally out of Boston. We now have a presence in Boston, Singapore, and London. The Southeast Asia arm was set up just coming up 2 years ago, headquartered in Singapore. And we focus on Southeast Asia, India, Australia, New Zealand, and Hong Kong, across digital health, fintech, enterprise software, and cybersecurity. We typically invest from pre-A to Series B, initial check size anywhere from 1 to 10 million. Important thing to note is we're a financial VC, so we're set up as an investment subsidiary of MassMutual, which for those of you who don't know is a Fortune 100 life insurance, asset management, and financial services group. So while our fund's not a strategic mandate, we do have a very close relationship, obviously, with the parent group. So we leverage that as best we can to the benefit of companies we invest in, which is primarily introductions to potential customers, general expertise, and access to later stage capital. So we have about 40 portfolio companies so far across funds. 9 of those are in Asia, 8 of which have been announced. There should be another one announced in the next week or so. And about a third of those have been in digital health. That's us.
Awesome. That sounds great. I know you've been very busy this week, so thanks for making the time. I look forward to hearing a bit more about the investments and your strategy behind those in a second. Antony, ex-colleague from Manulife, welcome. Could you tell us a little bit about how you're going and where you are right now, and a little bit about your role at Manulife?
Yeah, thanks, Matt, and thanks everyone for the opportunity and the privilege to talk to you today. My name's Antony Vriens. I am currently based in New Zealand, although I'm meant to be based in Singapore, but they won't let me back in, and I'm not sure when they will. But New Zealand is not a bad place to be at the moment. My role in Manulife, I run a team called Insurance Technical Services, which is a regionally based team. So we look after 11 business units across Asia. My team and myself are responsible for claims and underwriting transformation, and pretty much that's digitisation of the claims and underwriting process, but also the risk controls that sit around it. My team's also responsible for the end-to-end health journey within Manulife, so that's on the operational side, and owners of the claims customer experience as well. I have the privilege of being a doctor by background, so I've been on both sides of the fence in terms of health. Actually working as a doctor, working for and running a health insurance businesses in Australia and New Zealand, and now as part of a life and health organisation with Manulife.
Great, and I can't imagine anybody better qualified than to give us the story of insurance and COVID, so we're looking forward to hearing more about that. Raimondo, I should point out that Raimondo's borrowing my Zoom link, so he's actually showing his maps, but Raimondo, can you tell us a little bit about a bit of your background? One thing I think would be super useful, by the way, is we're going to talk a little later about reinsurance, and I think not everybody understands the role of reinsurance, so it'd be great if you could perhaps explain that a little bit.
Yeah, fantastic. Thank you, everybody. Thank you for being here. I do apologize, a few glitches. I had to change to 3 devices in order to be able to join the call. And it's a pleasure to be with all of you here. A lot of familiar faces, so please let me just say hello to all the panelists, Ryan, Anthony, Isabella, of course, Matt, and Julien, and so forth, for having me here. Well, I would say that my background is somehow resonates very much with a lot of people that are recently joining the insurance industry, in a way that there is a general change in terms of capabilities that is happening from mid to senior leadership level. What I mean by that is that there is a more diversity, or they are trying to deliver more diversity, where diversity is not simply by gender or by ethnicity, but is actually by background as well. Is a very monolithic kind of environment where people usually either belong to an underwriting function or an actuarial function, or the odd ones that they come from other backgrounds. While right now we are seeing a more diverse kind of composition, a leadership level that is trickling down. Why I'm saying that? Because originally I'm not from the other insurance or insurance business. I had a very different background compared to many other people. My role before getting into insurance was actually with a DuPont, a chemical company. I worked with a large regulator in the UK. I worked in food and agribusiness, and eventually I ended up within reinsurance. And right now I just finished working with a large reinsurance, and I'm enjoying doing my little investment in a number of startups out there in the health space, as well as working with a number of major players in the region. Now, in terms of reinsurance, what is very interesting is that when I first joined, I didn't know what was reinsurance. So Matt, your question is actually very well posed. And I would say that up till now, if I meet up with friends, we still question ourselves, how is it possible that they make money? And importantly, how is it possible that they make so much money? It's an extremely asset-rich kind of industry. In a very layman kind of definition, reinsurance is nothing else than an insurance for insurances. In a better way, I would say, just to give you a comparison, especially in Asia in certain areas, insurance stands to an insurance company as like Intel stands to any producer of laptops or computers out there. They tend to produce what supposedly is the brain of an insurance product together with partners, and then they market that product. Actually, that product gets marketed by the insurance company, and that is very much true on the life and health side.
Great, thank you for that. We're going to return to reinsurance a little bit later, but first, Isabella, welcome.
Hello, everyone. Can you hear me well?
We can hear you great.
Fantastic. So we already breached the first barrier of technology, right? That all of us are learning over time right now. So I work for AIA, which I'm pretty sure all of you know, largest Pan-Asian life insurer, but we are also the largest Pan-Asian health insurer. And I work in the strategy team, which has two different angles of seeing the world. One angle that is pretty much organic, which is really looking at goals, objective, vision, what we should be doing moving forward in the health and well-being space, as well as a more inorganic angle, which brings three different types of partners that can help us develop new channels, partners that can help us deliver on new propositions and value add to our customers, and third, partners that can deliver technology that enable all of this to happen. Sometimes some of the partners that we look for have all the three elements, the two elements, or a blend, but this is what we look for in a more holistic way. Obviously, health and well-being being key for us, not only because we talk about it, right, in our logo, it's in our brand promise, which is healthier, longer, better lives, but also because we live that every day as a purpose in our teams to really make that happen. And this is accelerating, and this is why this specific area is becoming and will become each day more important for us.
Fantastic, awesome, great, love it, and look forward to hearing more on that in due course. So first question really, and we start each webinar with the same question, which is, COVID. When did you first learn about COVID? What was your reaction to hearing about COVID? I'm really fascinated as well, particularly in the world of insurance, because I would imagine when you're thinking about a sales team, you've got thousands of sales agents out there. Some of your organizations have got huge internal people to manage as well. And then, of course, you're in health and managing claims. Is COVID covered by our policy? What's the likely impact of that? So probably more than any other kind of organization, really fascinated to hear about COVID and how you sort of reacted to that. And I know you're going to have a diverse set of stories here. Let's start with Ryan.
It took me, you said you might ask that, it took me ages to remember. And I honestly still can't remember where I was or exactly when it was. But I do remember, and I feel like an idiot now admitting this, but hopefully if you go back and look at the press, you understand, like, just not thinking it was going to be that big a deal. Like the press at the time, and all we kept hearing was it was a flu or slightly worse than a flu, and there'd be a sort of a bit of a higher death rate. But so that was, I guess, the initial reaction. And then it just felt like, I was going to say a slow creep, but I guess it's all happened quite fast. So maybe it was a fast creep over a few weeks and months to suddenly then just being, the worst thing that hopefully any of us would experience in our lifetimes. And there was definitely, sitting here in Singapore, and I don't know if you went through this thinking, Singapore went from being the best place to be to then thinking, oh, but is it maybe time to get out of Singapore? And then you see it spread to Europe and the US, and then nobody had a choice anyway, because you're pretty much stuck wherever you are, as Antony's finding out, but he's probably in a good place to be stuck. So yeah, that's the honest answer, is not thinking it would be that big a deal, and then gradually realizing it was. But luckily Singapore seems to have managed it fairly well, touch wood, and we'll start going back to normal fairly soon.
Great, thanks for that, Ryan. Antony, I'd imagine you've been really in the thick of it. Tell us about your experience.
Yeah, I first heard about it actually when it came up on the World Health Organization website around New Year, just because I do get a feed from them on WhatsApp, and I was kind of looking at it going, oh yeah, it's just another, small variant of MERS or SARS or something like that kind of is just going to be a repeat of what we've seen in the past. And I think very, very quickly, because we actually have a China business that actually operates in Wuhan, we got a real shock when all of a sudden the world kind of turned to custard in China. But even at that point, we were still thinking, oh yeah, it's just going to be China. It's not going to affect us. And then I think as the stories started coming out, as we actually started seeing it spread to other countries, it just became more and more real. From a perspective in New Zealand, we only got our first case on February the 28th, but within 4 weeks, we were actually in complete and utter lockdown, basically staying at home, only really allowed to go out to supermarkets or the doctor. And, we managed to kind of get to a point where we don't have any more cases in New Zealand, but the last kind of like 2 months have been kind of surreal. It's very quickly accelerated into a major epidemic. I still look back and think, yeah, like Ryan, I kind of took it really quite lightly at the beginning. It was like influenza A or something, it will spread around the world. There'll be a, maybe less than 1% of mortality rate, which is still terrible if it happens to you or your family. But we're used to these things every year, almost seasonally. But this has been quite profound, and I think, we still don't know what it means, both in terms of health or economies going forward. And I think that's the huge unknown that we're actually going to have to deal with over the next few months.
Thanks, Antony, for making me feel better about my answer. For a doctor to say that makes me feel better.
You can pay me later. Yeah.
Thanks.
Antony, I'm just curious, this is a supplemental question. What was the sense in the insurance business? Was it a sense of panic? Were there crisis meetings? How did the organization react as perhaps, as we came into 2020 and it was clear it was sort of spreading from China into more of the region? What was the kind of organizational reaction?
The organisational reaction, I think, was very, in our sense, it was actually very calm and considered. I think, we talked about it quite early because of what happened in China. And I think very, very early from that point, we said, okay, what if it does spread? What have we got in place? What are we going to do? And I think because we have so many different BUs and jurisdictions across Asia, every country, every government, every border was treating things differently. So I think we took a very conservative approach. We stopped travel around Asia very, very early, and also even travel to North America as well. So we kind of started the almost self-isolation. We're probably one of the first companies in Hong Kong that actually worked from home when they started getting their cases. And that was basically almost 90% of our workforce working from home. We had a couple of very shock issues where we do a lot of outsourcing to the Philippines, and the BCP didn't work. So we had to pivot very, very quickly, as half of our operations for Hong Kong and Singapore were in the Philippines, and we had to bring that back in-house. So it was kind of like all hands on deck, but all hands on deck through our VPN and remotely. And to be fair, 9,000 employees being on VPN, it actually worked without a hiccup. So, hats off to our tech people, our tech strategy, and our ability to actually support our people at home, even to the point where, we can work from different parts of the world. I have colleagues in Australia, other colleagues in New Zealand, colleagues stuck in the UK, and basically we're just, apart from time zones, we're doing well. I think the real shock actually came in North America when it actually hit there, because I don't think they were expecting to have it as bad as they did. So, yeah, I think but even they, responded very, very quickly and very, very efficiently to what needed to happen. I think we've been very, very lucky. I think we've had very, very few staff members or agents who are actually infected by COVID. We've sadly had, I think one death on the staff member, and one death in terms of our agency force. And our claims experience has not been too bad. I think Asia's used to managing these pandemics, and they actually, I think, as a region, they actually responded very well.
Yeah, great. Thank you for that. Raimondo, what was the experience like for you?
Well, I think that after what Ryan said, I wouldn't feel that bad, but actually is a funnier what I was doing. I was actually cooking, and I was in Malaysia, and I was about to come back to Singapore, and we had numbers popping up. And that was a bit of an experience, but I would actually, what Antony was saying, I had a number of friends and peers within the industry that were reaching out because they were getting, not in panic mode necessarily, but a lot of COO were trying to set up their different infrastructures. And that caused a wake of preparations. And what maybe a lot of people, they might not consider, but I would is a huge kudos to the industry, is that whereas in other industry, like for example oil and gas, where I used to be, there was a BCM, business continuity plan. They've always been in there, and always been strongly enforced, and so on and so forth. In many organizations within the insurance industry, yes, they were there, but they were not considered top priority, not because they were not top priority, but because, let's face it, unless you are in London and you're on the Thames, you're not going to be having your office being flooded. Hence, they were able to put in very swift responses. On my side, as an economist, I should say that I look at a pandemic as like another economic cycle. And I say, yes, when you start from zero, there is always going to be a growth. So I wasn't that concerned back then. I'm concerned from a human point of view. And as a person, as having a family, and having a family both older than me and younger than me, of course, that is a concern. But one thing that really stuck with me was when a member of my family, I would say, I'm gonna say it, my sister, she had to work in an hospital in the northern part of Italy. And when you were seeing coffin being escorted out of the army, and nobody could get close to it, it really kind of hit home. And I believe that that is one of the memories that is gonna rest with us for a long time. At least in my country, I believe it's pretty clear. I am Italian. we are a country where usually we kind of, it seems that we are not able to follow a single rule. When the lockdown was imposed, people, they stayed at home for 2 months. And I would say that this gives a lot of credit to what as well in New Zealand is happening and what it would be happening in all the other countries. So I have a very positive outlook. Maybe I'm an optimist. What can I say?
Good. Thank you for that, Raimondo. Isabella, what was the experience like for you?
Yeah, so first of all, I think I'm in Hong Kong, right? So when this started, the first news came from China. The majority of my colleagues were already in red alert mode, already wearing those masks, already buying a lot of supplies, and tell me this is going to be bad because they had the SARS experience before. They had obviously concerns over the data and how this illness could have been already here in the territory or in other places. So when I first heard of that in the press and from my colleagues, I had two different reactions, I would say. One emotional reaction, thinking, well, it doesn't seem that bad. But one rational reaction that was telling me they've been through experiences that I cannot fully comprehend. Therefore, I should better listen to them and take my precautions. So since the beginning, I was alerting my family, which is in Brazil, where we also don't follow any rule and we have zero leadership in the moment against the virus, unfortunately. And I was telling them this is going to be very serious. But I think they were really in denial mode, as many of the people there still are. I think from a business perspective, early on, we had crisis committees. We had quite a bit of information. I work very closely with our clinical teams, generally for more positive things, right? We are clinically assessing a startup or a new service or building journeys that we want customers to experience. But in this time, I was really in touch with them to understand the data that was coming through and what was the progression going to look like. And I think it's just the sense that everybody had as well of losing control, not only of your emotions on the personal level of it, so this generates fear, but as well as to say, okay, what is going to happen to the work we're doing? How can we be productive, not being together? And how it's going to be affecting the numerous efforts that we are undergoing right now. And I think on that perspective, there are positive externalities. So the first one is thinking about collaboration tools and using them more efficiently. So I think we got much better over the last few weeks, and that's pretty good. And secondly, also looking at health more broadly, as everybody was living with fear and under different circumstances, you're like, but mental health is very important. So we cannot say that it's a taboo in Asia anymore, because everybody feels it, and we are in a situation where we can express it, even in cultures where generally this would not be the case. So on our end, if you want to make a change or to make this less bad than it is, let's look at that in a different manner. So I think this is what we're trying to do. Great.
Yeah, very interesting about how I think COVID has kind of changed all of us and perhaps, you know, our attitudes to things like mental health. And it'd be interesting to see how that's going to show up in some of the ways in which insurers help people with that in the future. Let me switch tack then. Let's talk about the remainder of 2020 and going into next year. So really kind of fascinated to know what now are your kind of key priorities for going into next year, well, the remainder of this year and going into next year. What are your challenges that you have? Has COVID affected any of that? And we'll start with Ryan. And Ryan, at this point, feel free to maybe elaborate a little bit on some of the investment decisions that you're making and how you're sort of thinking about your portfolio currently, and you know whether COVID has perhaps impacted any of your thinking there.
Sure. So it's been, I mean, with the constraints of being on lockdown and not being able to get on planes, you know, other than that, it's been fairly business as usual for us, to be honest, on the ventures side. So, you know, we were fortunate to have just announced our second fund for the region at the start of the year. And so we've already started deploying out of that fund. And we had, even out of the first fund, made one investment where we hadn't physically met the company prior to making the investment. We'd conducted everything over Zoom. That was into an Australian company. And as a bit of a afterthought, once we'd made the investment, we thought, oh, you know, is this okay? Like, are we meant to have met them physically? So we ended up flying down to meet them. You know, other than sort of relationship building, didn't really get anything more out of it than we'd already got from Zoom. So we're quite comfortable, you know, still meeting entrepreneurs over Zoom, and have met, you know, dozens over recent months, and we're still, you know, very much active and looking for investments. We're quite lucky in that our Asia fund is just coming up over 18 months old. So we don't have a massive number of portfolio companies that we're sort of running around, you know, fighting fires with. Obviously, to differing extents, people have been affected, but you know, also most of these investments for us were fairly recent. So people had enough cash, and we hope have enough cash to get them, you know, through this and well into next year. And where they haven't, you know, it's a relatively small amount, they just need to buffer them to get through. So, so on the portfolio front, I mean, we've also got a few companies that have managed to repurpose existing solutions to actually, I mean, take advantage is the wrong phrase. I'm trying to think of a better phrase, but you know, get some, you know, give some value through what they're doing. So we've got one company in India called Cure.ai, which creates AI algorithms to automatically read radiology images. So they were doing that to spot tuberculosis, primarily in emerging markets. And they've managed to, they continue to do that, but since everyone's attention has been focused on COVID, they've managed to repurpose that to now diagnose and track progression of COVID-19. We've got another portfolio company that's a Singapore-based company called Bioformis that had a remote monitoring solution primarily for heart failure patients. They've also managed to repurpose that. So they're also now in multiple markets, monitoring patients with COVID-19 and tracking, you know, progression of symptoms there. So there's a few companies like that. So that's on the portfolio. I think in investments, I mean, particularly for this panel, since we're focused on healthcare, just what we look for. I think about, I mean, a third of our investments have been in digital health so far in Asia. You know, that's a little bit luck that it's just ended up with roughly a third of the portfolio. I mean, that's kind of ideal. We're about a third between our three focus areas of fintech, health tech, and enterprise software. Within health tech, I mean, we're really looking for things that help with the prevention of illness and therefore, you know, help reduce the severity of outcomes. So early detection, and then monitoring and ideally prediction and prevention of disease progression to improve outcomes there as well. So that, and we pretty much look across the board in digital health. So we have investments in, I've mentioned it, in diagnostic imaging, remote monitoring, digital therapeutics. We've looked at various rehabilitation applications, teleconsultation. We've looked at many of these. We ended up not making any investments yet, which in hindsight is looking like a mistake, given that that's doing fantastically well in the current crisis. And just even from me as a personal anecdote, I'd never thought to use these in Singapore because we're, you know, none of us are that far from going to see a doctor. It's different, you know, it's a different proposition when you're talking about Indonesia and India, but you know, here you're not that far. It's pretty quick. You get your medicine, you come home, and so it's not a huge step up to be able to do that remotely. But having had to do that a few times in recent months, I'll probably keep doing it for minor stuff. Why wouldn't you? And just get the medicine delivered to your house. And then just general sort of administrative and workflow tools to reduce the administrative burden. I think what we're seeing, what we hope is that you know, the current crisis will just accelerate the push into, you know, all of these things that are helpful, that, you know, result in a better patient experience, cut costs, you know, just make the whole process a lot better and more efficient and streamlined. We're seeing companies that have been having long conversations for previous solutions, that the ones I mentioned, that have managed to repurpose them and get solutions deployed much faster than they were for existing. So hopefully that continues.
Yeah, very interesting. Do you think, by the way, that your third, do you think that will change? Do you think if you see the opportunity, do you think healthcare spending would go up as a percentage?
It might do. I mean, we don't have any fixed limits on sector or country exposures. You know, we're sort of mindful of keeping some diversification across the country sectors and stage. So yeah, I mean, there's flexibility there. It depends where we see the opportunity, to be honest.
Yeah, great. Okay. Very interesting. Anthony, what's the rest of 2020 looking like for you in terms of your health strategy and priorities, and has COVID impacted that at all?
Yeah, I think COVID has probably been the biggest catalyst for change within the organisation that we've seen for some time. You know, I think you've all seen the meme where it says, you know, who's been responsible for the biggest digital change in your operations? Was it your CFO, your COO, or was it COVID? It's definitely been COVID. And we're, as an organisation, I think we've actually had to pivot quite strongly to just accelerate the digitisation of both the agent and the customer experience. So, I mean, with lockdown circuit breakers, whatever you want to call them, you know, face-to-face selling or even face-to-face advice or people coming into branches to do insurance transactions is just not possible anymore. And yet in a lot of our jurisdictions, people still were requiring to have wet signatures on pieces of paper. So, you know, to even just have to go to the regulator and get permission to use digital, you know, docu portals, digital tools, things like that. Look at ways of actually, you know, agents being able to give advice to customers over, you know, web portals, things like that. We've had to accelerate customers being able to submit claims, changes, policy servicing. All of those things have actually been a fundamental difference for us. On the other side of the equation, we have our global reinsurers, you know, who Raimondo has recently been with. You know, they're very much global businesses, so they are really affected by the experiences in North America and Europe. And their first knee-jerk reaction is try and apply those same experiences to Asia. So they're coming to us saying, be more conservative in your insurance business. And we're saying, well, actually, Asia is different to the rest of the world. You know, people are actually wanting more insurance now. So, and they're more aware of the needs, you know, to be covered for their risks. So there's actually a bigger opportunity here, and we don't want to be more conservative. So finding that right balance between risk and reward is becoming quite important as well. I think geopolitical is really interesting as well, with border closures and things, because, you know, for Hong Kong, a lot of business comes from mainland China. You know, so for 3 months, they've actually had a whole channel of their business actually dry up. At the same time, we also had the unanticipated regulatory effects. For instance, in Japan, the regulator said if someone's got an accidental death policy, COVID should be paid. COVID death should be paid under that policy. You know, accidental death normally means if you fall off something or get run over by a car, it was never anticipated to cover a pandemic. Countries where we have pandemic exclusions, it's a form of actually being able to limit your exposure. The government actually came out and said they're not allowing insurance to invoke those pandemic exclusions, and yet that is the basis on which some of the pricing is done. So we've actually had to scramble on several fronts, both the risk, the reward, and the digital transformation. And I think, you know, you can look at it as a series of threats, but it's actually also a series of opportunities, because it's actually leading us around different ways of developing products, different ways of exposing offers to customers, different ways of supporting customers over the medium to long term. So it's an exciting time even to be in the industry and actually take that opportunity also.
Yeah, actually there's a couple of questions from the audience, which I'm just going, as are kind of relevant to what we're talking about. One of them is around digitization of health claims. And Isabella, I'll ask this to you in a second as well, but how easy or difficult, I mean, bearing in mind you're talking about moving the Philippines operation temporarily to China, and just the, you know, some of the customer experiences of trying to do claims, you know, for those of us that have done it, it's quite arduous. But from your perspective, what are some of the challenges in trying to digitize that whole claims process?
We were actually incredibly lucky in that we had a lot of digital assets already in place. So in China, over 50% of health claims already were coming in through a WeChat portal. 4 of our business units already actually had electronic submission of health claims, whether it's like the simple hospital cash products or even medical reimbursement products. So we actually had some of those digital assets in play already, and that's where the pivot has been to actually, rather than develop them further, let's get them into every country and give customers the opportunity to submit any type of claim actually through a digital portal, for example. The back end might still be difficult, and we have those back end solutions as well that we just need to link. But I think our change in our architecture that we embarked on a couple of years ago actually served us well. So it wasn't a lot of pain necessarily to actually get that. The thing that it did do was actually force adoption of those digital assets. So while maybe only 10% of customers were using them, in the last 3 months, 80 or 90% of customers have been using those portals or those digital ways of transmitting their information. So, and, you know, like Ryan was saying, you know, you wouldn't go, you probably do your teleconsultation going forward. I don't think they'll go back to filling in paper-based claim forms anymore. They've experienced the technology. It's worked. We've done a lot of work from my team actually in auto-adjudicating those claims using analytics tools and things. So, you know, we've been quite lucky that we're on that journey already, and we're able to pivot and expose it to a number of business units.
Great, awesome. I'm going to go next to Isabella actually, as we're on this theme. So Isabella, 2020, what does it look like for you in terms of priorities? Is digitalization of claims, does that form any part of your strategy for this year? Or maybe you're already doing it.
Yeah, so I think I really concur to what Antony has talked to before. So this has been an accelerator of digitalization as a whole. So in that perspective, it's positive. I think the flip side on that is really that people want it right now. And we're like, okay, things take time for them to be implemented in the right way. Obviously, you can implement certain digital assets more quickly. And you're going to be focusing, obviously, once this happens, in digitalizing your distribution, because you need to keep business happening. But there are so many other points in the overall organization that need to be digitalized. So I think the plans to do so have really accelerated and gained much more support, both at our group level and also our country levels, because as you know, we cover 18 countries. It's a gigantic diversity of needs and also of opinions of how digital channels and interactions are important. But I think the key point now is that as the more traditional avenues of growth are not necessarily feasible anymore or viable anymore or need change, people now see that this is not the future, this is right now, and we need to really take that into consideration. When we think about health as a whole and health and well-being for us, I think the overall direction hasn't changed, because since the beginning, our goal is really saying we want customers to have an integrated journey through predict, prevent, diagnose, treat, and recover, which is the end-to-end well-being and health journey, right? And I think also, to Ryan's point, prevention is a key element that we want to each day more enhance, because at the end, we believe in shared value. So it's really about, all right, we are not only to pay, but we want to help you to manage what you have in terms of any existing condition, or help you to make the best choices for those conditions not to happen in the future. So I think the vision continues to be the same. The difference is really the acceleration. But one key point from that perspective in terms of customer is that when we tried before COVID, right, to talk to the BEs and say, hey, look at telemedicine. This is a very good solution. It helps with steerage. It helps with increasing access to healthcare. People need it. And they would say exactly what Ryan said. For example, in Singapore, I could just walk, see a doctor, very easy. Why am I gonna do this? Or in other countries, no, but people will not trust. They don't know the doctor, right? The big difference with COVID right now is that the fundamental barrier for adoption, which is trust, has been overcome, at least for key use cases, right? So telemedicine, drug delivery, home monitoring. So now people understand the value and perhaps they trust this. And part of this cohort that started using that because of the virus, we continue to use that for convenience and perhaps cost in the future. So because of that, we can structure offerings that wrap this around, right? Around this digital offerings more easily, because Now we know that people will use them, right? So I think that's a big difference. In terms of claims experience, for all insurers, it has to be the focus. I think for all of us, we're always going to find pain points and things to do it better. But I think there is one point, obviously, in automation, where it's not about the submission, but it's also about how to communicate the process better with the customer. Because what we have seen right now is that digital is not the answer for everything, right? It's one part of the whole journey and the whole proposition and value that you pass to a consumer. And I think in parallel with digital, this communication piece that can be enabled by digital, right? By automatic communication about the status of a claim, or by a person calling you, or a chatbot. I mean, it's not about the means, but what you propose in terms of communication transparency is also an element we're working on, because we see value for the customer there.
Great. And a sort of follow-up question from the audience, just as we were talking about teleconsulting, and clearly there's some great benefits for the customer. From a business perspective, does that have any significant impact on costs for an insurer? Is that helping you reduce some of the costs of provision? Perhaps Antony, you'd like to take that one.
Yeah, we're not sure yet. I mean, I think if people have more access and doctors manage their time better, we actually probably will see people spending more time on their health. We haven't seen a cost impact yet from it, but we obviously would absolutely support people having those kinds of consultations. Possibly the really interesting thing for us is that teleconsultation, because it doesn't involve a physical examination and doesn't involve other parts that have been traditional parts of the insurance process. You know, we need to have a blood test, you need to do a urine test, we need to take your blood pressure. It's actually going to change the type of evidences we will probably use in our underwriting going forward, because we're going to rely more and more on these teleconsultations for our underwriting without necessarily having some of that biometric information. And that's where I think innovation is really going to accelerate. You know, we're going to look for partnerships where people have, doing, interesting things with the Internet of Things. You know, can we do simple home-based blood tests? Can we create something where someone can do their own blood pressure at home, using their Apple Watch or something like that? Are there, a lot of those technologies have been talked about, they have been, trialed, but they've never been commercialized. I think the commercialization of those things are actually going to drive a whole lot of innovation in this space. And we know we're going to be funding some of it either through our customer journeys or actually through our investments.
Yeah, great. Isabella, did you want to add anything to that?
Yeah, so I think in terms of cost, there's one point for many insurance policies. I'm not only talking about us, but I'm talking about age in general. Oftentimes outpatient is not covered unless you're in a group policy. So if you think about purely outpatient primary care, et cetera, you're not going to really see a direct cost impact. As a matter of fact, for us, for many of the initiatives that we took with COVID, we are giving that for our customers for free, because it's not only about saying I'm covering you, but I'm giving you also a service, and when you need it, we are there for more, right? But I think we need also to think about the end-to-end and holistic value of this, right? We talk about prevention. We as AI, we have vitality. So we believe in identifying things sooner than later. And I think this is one of the tools we have to use as well. So this is accelerating the usage. And I think it's important for us to stimulate people to go to the doctor actually more frequently, to uncover things as they're still small. So it might be a cost in the beginning in case we start funding that or giving that for free. But in the future, I'm pretty sure we're going to recover that with customers being healthier, less claims, and seeing that we are giving a value to them. So I think, again, shared value, positive for all sides. Yeah. And with regard to biometrics, I think that's a fascinating thing that we're also looking at. But it's about the convergence of what does an insurer do? What is a provider looking like? Because the diagnosis, right? What is a pharma company looking? So I think this is where we start to blend our interests with other types of players and have to position ourselves very carefully, right? Because at least in our case, we're not providers everywhere. So we need to manage that carefully, but these are tools that will become each day more important for people to understand their health and manage their health better.
Yeah. That's a really fascinating point, actually, I think, is, you know, the power of data, and as the increase in biometric or digital biomarkers becomes greater, you know, the ability, where does the responsibility lie in terms of, you know, making an intervention on health? That's a fascinating topic. I'm going to switch actually now into wearables. And this is a good segue, I think, into actually more wellness platforms, wearables, and biomarkers. And I had a question posed to me twice this week, which I'm going to throw to Raimondo next, which is things like, you know, the actuary profession. These life tables have been around for centuries, which have a fairly predictable, okay, there are things like COVID that come along, but, you know, a fairly predictable mortality prediction that insurers have been using for a long time. And now suddenly, in the last 5-10 years, we have all of this new data coming on screen from the Apple Watch and from other wearables and MedDev and all that piece, often beginning to get plugged into wellness platforms, maybe like Vitality or Move. My question to Raimondo is, so far, is there enough data? Do you expect to see, how do you expect this new raft of data to affect things like, do we know that this particular cohort of customers is going to claim less because they're doing more activity? What, is there enough yet to really inform in a different way the actuary profession?
Oh, well, Anthony is smiling. We spent two. You kind of called me out on that one, so I need to be very professional, I believe. Well, it's a very long question, and a very long answer it might be required. But I would like to try to build on what Anthony and Isabella they said, and Ryan as well. Because when I actually joined reinsurance, that was a few years back, about 4.5 years ago, we started with, we had a strategy and we had a vision. We wanted to be the trusted partner in people's health journey. And we wanted to have people to live healthier for longer. Well, if they were living healthier, they were actually claiming less. Well, fantastic. Bonus. Since we were a life reinsurance, if we were living longer, each day on our more was a few billions on our balance sheet. So that was even fantastic for the business and resonated very well with the potential customers out there. Now, here there is a catch, is that as a reinsurance company, I tend to joke with my actuaries, the only place where they see customers is either when they go to the cinema or when they go to the supermarket. But especially if you work in Hong Kong, since you don't leave the office until 10, 11 o'clock at night, both options might be actually reduced to a 7-Eleven. So I'm just saying that because it just gives you an idea of how separate is this provider within the value chain from the rest of the value chain. Now, in terms of what we were building back then, what we were looking for was indeed something that was going to bring data within the underwriting function as well as the pricing function, because everything that I heard so far is fantastic. And Anthony, Matt as well, you have known that about myself. I looked quite a bit into these wellness programs. I remember visiting actually Manulife in Toronto and talking about John Hopkins, how they're using Vitality in the US. Now, is all, of course, nothing can be, is a fantastic program that works very well if you want to create awareness and if you want to have a marketing budget per se to actually use to create awareness. But if you want to involve the reinsurance in the back, you need to reduce the risk exposure. And to reduce the risk exposure and to have a better pricing, the person needs to be healthier before he buys insurance, not after he's bought insurance. Because once the price has been set, the insurance policy rests with the insurer, hence there is no requirement for the reinsurer to do anything after that. If there is anything that is going to happen with a number of policies that are going to be sold, yes, great. If there is something that can be done on the claim experience, fantastic, but it's not going to move the needle that much. And of course, people might say that I'm wrong, and I accept that. This is just my personal interpretation of it. Now, in terms of the wealth of data that came in, the industry overall has this feature, and I really appreciated what Isabella and Antony said, that companies that have been either preparing for it or gearing up. Now, in the reinsurance industry, and of course, I don't want to generalize, but in specific experiences, there was a contest a bit like, I bought a car, the car happened to be red, hence is a Ferrari. Well, like if the car is red, not necessarily is a Ferrari. And conversely, if I hire Michael Schumacher or Hamilton, doesn't mean that my red car is going to go as fast as a Ferrari. And that was a bit what was happening. There was a lot of marketing kind of activities out there to show that they were getting better in handling with data, but effectively, a reinsurance company, of course, we have different examples in the industry like Swiss Re, Munich Re, and so forth, doing fantastic things on that side. It's not a tech company per se. So when you say we bring in new data, fantastic. How do we do that? What kind of consumption layer do we? Because you would need to build it. And once the data comes in, as you said, actuaries have been used to use tables for the longest time we know. Now, I remember asking somebody if I could have used continuous data to do pricing and if I could actually use correlation instead of causation model. And the person that was chief pricing actuary for Asia very nicely replied, well, if you find somebody that is going to die while he's wearing a Fitbit, please feel free to bring over the data. Now, as you can understand, it's very difficult to go against that. Hence, the need to create partnership. And the last point about the wealth of data and how it's going to impact potentially on the reinsurance side and how it's already impacting is on the medical side, on the underwriting side. Because without actually being wanting to say that being an underwriter and actuary is necessarily better good, on the underwriting side, doctors, they have been dealing with a large quantity of work that is very difficult to sustain over time. So if there is anything that can actually improve their ability to both underwrite and assess claims, that is more than welcome. And usually they tend to be extremely open-minded. They're always very nice. But what is vital here is indeed the vitals, because whenever we were developing something new, and if that needed to be actually transferred into a product and then being market for insurance, data needed to be coming either clinical data or from FDA approved devices. So, and that was a challenge of 3-4 years ago. Right now, when I was telling you, I'm working closer, for example, with a startup, I kind of found what I was looking for 4 years ago. A startup that is able to do teleconsultation, is able to have FDA approved data collected, and is able as well potentially to be used as a lead generation or underwriting tool. All of that, though, if it's in the hands of an insurer, would not require to share risk. If you know your risk and if you can manage your risk, why would you need to sit back that much risk? And vice versa, if you are a reinsurance and you know how to manage the risk, why would you want to actually share the risk? But even further, I had conversation with the large hospital chains that I would say in a cheeky way, they asked, is there a way that we could either use or rent or buy a reinsurance license? Because if you have all the chronic disease risk and you know how to manage it, who would stop, for example, who would need to stop an hospital for managing all the diabetics if they know they can actually manage it better than anybody that is sitting around this table? These are just few thoughts, but I believe is important to bear them.
Yeah, thank you for that. That's very interesting. Just sort of building on that, I'm sort of fascinated by the wellness platforms, where they're going to head next. Just briefly, because we're getting towards the end of the session, but things like Vitality and Move, and there are other examples. They sort of started as I'll do it as customer activity, in return for a reward. How do you see them as platforms developing? And the other thing I'm really curious about is a customer entry point. So after I become a customer, the sale is done, I'm now a customer. what do you think is going to be my front window into the insurer? Is it going to be the wellness app? Is it going to be some kind of logged in web experience? Could it be the teleconsulting piece? Because that is becoming quite an important entry point for customers coming in, you know, as they do claims or they're looking for health advice.
Yeah.
The future of that, let me ask Isabella for your reaction there.
Yeah, so I think for us, Vitality is a key asset, and we want to expand that further. So I think that's the short answer, right? We are focused now on a specific type of program, a specific type of construct. So we want to expand that construct aligned with our view of one customer, multiple journeys across the health continuum. So when you talk about, is it wellness, is it telemedicine? Well, I see one customer that might have multiple needs, right? So our role as an insurer is to say, okay, if you are healthy or if you are sick, I have to build journeys that make sense for you and assist you over those journeys. So I think this is where everything comes together and comes towards this integrated journey that we aim beauty. So that's the vision moving forward.
And there's a question from the audience which is sort of related to this, which is around, you know, the data now that you're seeing through some of these platforms. Are you getting interested in partnering around predictive data, trying to understand when you look at some of these digital biomarkers, could you make an intervention or offer advice proactively? Is that figuring in your thinking at all?
So this is a very sensitive topic, I would say, because I believe as an insurer and working for an insurer, that's the best thing to do for our customers. Say, hey, we're going to use this data for something positive to you. We are not a provider. We're just going to tell you, hey, you've been measuring, for example, your BMI, and we're seeing a positive trend, right? I mean, a growing trend, but it's negative, actually. We would advise you to do this, this, and that. Or if you're wearing a device and we can measure other types of biomarkers, we can give you nudges to the right behavior to gear you towards something that is positive for you. Now, that's our intent, but we need to play the intent in a way that is very careful, because a lot of customers might be afraid of that. Because they're like, I don't believe in you. You're using this data for underwriting. You're going to price me out. And that's something I understand. So I believe us and other insurers have this two different incentives in mind. Should I do what we actually believe is the best for the customer and we'll give them the best of a value, but how to handle this trust issue? So I think as we design this vision moving forward, we are playing with both and see until where can we go without hurting adoption? Because finally, this is important if customer use this, right? And if they trust us. But I think the key point is really saying, which are the key use cases we want them to try to see that there is value. And then you build up from there, because then trust gets built up from there. So again, I cannot say, okay, Vitality or the health platform will become a big bang in the next 2 months. It will not, because even if we would build that in the next 2 months, it would be the great platform with everything you want to have in terms of digital health, people would not adopt it. So again, it's a long-term play, accelerated by COVID, but it's a long-term play. We're touching people's lives, we're touching people's health, so it has to be little by little in a very thoughtful way.
Yeah, that makes a lot of sense. Antony, does that resonate with you?
Yeah, I think the biggest thing I'll concur there is on the trust piece, because for a platform to work well, dependent on your strategy, customers need to trust to share their data or actually have a real reason to do that. So, I mean, in a lot of ways, these platforms started off as engagement platforms. It might have been to measure steps, or it might have been to track activity or provide a marketplace or all sorts of things. But as that data matures, you can start using that data, but you need the customers to trust you to use it in a way that they see as beneficial for them, and to trust you that you're actually not going to use it in the wrong way, because there are ways, as Isabella said, that you could use it to, at an individual level to you know, I guess the word would be to discriminate against certain health groups. The opportunity in that is that you can take certain health groups and you can curate solutions for them. You can curate either, you know, insurance solutions or wellness solutions. And that is where all of these platforms, actually, that's where we create ecosystems. We can't be everything to everybody. So, you know, we're not going to be the provider of medical services, you know, unless we start buying hospitals, you know, but actually on the other end, we can actually help customers find the right specialist or find the right doctor or, you know, get the right advice or be that trusted source of their information that they need. And we found that during COVID that customers were coming to us to actually find out exactly what COVID was and how it could affect them and the things that they could do. So we had to, you know, do a lot of work around actually having the information available for them because they were looking to us as a trusted source. So, I mean, that was great, and it actually gives us hope for the future and this journey. But absolutely, medium to long-term play, you know, and it challenges the traditional model of insurance, you know, where we sell them a policy and you send you a bill once a year to pay your premium. This is now around, it's not around that transactional nature of insurance. It's around the relationship you create with your customers over a long period of time. And I mean, if your starting point is doing what's best for the customer, I think that economic value does follow, you know, quite easily.
Yeah. Fascinating, great stuff. Okay, last question, because we're really out of time. But one topic that's cropped up sort of repeatedly in previous webinars and conversations is, I think we all know that insurers are quite complicated beasts. You know, they're big organizations, they have global, regional, local teams. We have a lot of people in the ecosystem that are looking to partner with insurers. I think some of them find it a little difficult to engage with insurers. They're not sure who to go to. I think sometimes they're not sure about what's the kind of criteria that you're looking for partnerships around. Any tips on and hints about, if I'm coming to you, what are you looking for? Is it ROI? Is it fit? Is it something else? So I'll start with Ryan actually on this one. I mean, in terms of the next year, Ryan, any particular tips or hints for the ecosystem that might be looking to engage with you?
Well, I guess for us, it's very straightforward. I mean, we're looking for investments in, you know, companies that are at pre-A to Series B stage in, I mean, most of this audience, I guess, will be digital health, but digital health, fintech, and enterprise software based in Southeast Asia, India, Australia, New Zealand, or Hong Kong. So if you fit in that, get in touch. You know, it's as simple as that, really, for us. You know, we're quite a lean team. There's 4 of us in Singapore. You know, we have a very, you know, quick decision-making process. You know, we're you know, I guess we're probably not always perfect, but we try and at least give honest feedback to people when we, you know, decline to invest. You know, and I'm happy to help people too, just through our own networks and through the parent group and the portfolio we've got globally. You know, whether we invest or not, to be honest, you know, we like to try and sort of help the ecosystem. So it's, yeah, pretty straightforward in terms of how to engage for us. Find one of us on LinkedIn, go through somebody else that knows us. You know, and everything's on our website in terms of other investments we've made, so it should be pretty obvious what we look for.
Great, super, thanks for that, Ryan. Same question to you, Anthony. I mean, are you actively looking for partnerships, and what sort of criteria?
Yeah, no, absolutely actively looking for partnerships, which is why we do have the relationship with Galen already. And in several of our business units, we actually have got some ecosystem partners, particularly in China and Indonesia. And looking for those elsewhere, you know, with our Move platform also. I think from my perspective, I mean, the entry point into the organization is generally, I think, through the tech side more than anything, but it probably shouldn't be, because the tech guys are going to look at the tech, they're going to look at the solution, they're going to look at the code, they're going to look at APIs and microservices. I think for us, you know, sell us what you're solving for the customer. You know, it's very much, let's start with the customer. What pain point have you identified that you are solving with your solution, and how robust is it, and how do you think it could fit within our value chain? And that's where I guess it's useful to know people, I mean, probably like myself or Isabella within an organization that you can just come and talk to, and chew the fat, I guess, as such as to what you're doing and what you're trying to do. I think the worst thing is where we're going out and say, can you do this? Someone says yes, and yet they actually can't, or they're trying to do it on the fly. We need the confidence in ability, and the confidence that you actually have thought through what you're trying to solve for the customer and how we can actually use that within our journeys.
Okay, great. So very kind of customer solution focused there. Great. Raimondo, when you're thinking about maybe the reinsurer, what types of partnerships and of interest to a reinsurer?
Very good question. Well, until not long time ago, you should have come to me. I was running investment for a larger insurance. But I can straight away saying that there is a catch working with the reinsurance against working with an insurance is the fact that the prior company that I was, we had about 40% of the market, and all the insurances were our clients in health and life, and make us a bit of an incentive in terms of providing them with a channel. And I would say that it was good to work with an insurance company, a reinsurance company. Then there is a catch to that as well, is the fact that what we were mentioning before, you can work with an reinsurance company, but then you need to teach people how to dream. Because unless you can actually deliver straight away a solution that is going to work for the next 15 years that the policy is going to run, they're not going to work with you. That is the other bit. The other part, I'm just telling a bit more on the kind of partnership that are setting and the kind of investment they're looking for, rather than actually exactly what, simply because it's the exactly what is contingent to what kind of product is being developed. But the way that they're actually partnering is way more important, because unless the reinsurance company is a direct arm and they can sell policy in a specific market, they will need always to partner with the likes of Manulife, AIA, and Antony or Isabella, and so forth. And those companies, ultimately, they will own the relationship. And as I would say, yes, you get more access to the market, but you need to be more mature than what you might think that you are. But sometimes the money wouldn't buy the maturity. And on the other end, if you want actually to work with an insurance, you still need to then build the partnership and the relationship with the insurance company. So what people are looking for, straightforward. Can you improve on the claims experience? Yes, fantastic. Can you ease the underwriting process? Yes, fantastic. Right now, a lot they have been working around developing AI engine in terms of underwriting and ideally pricing as well. And there are some ethical issues ongoing. Something like, for example, a discrimination based on gender or other they could be inbuilt in the model without knowing it, because your data set is biased by definition when you build it. So there are a number of solutions. It's just about understanding which level of maturity you are and how long you can actually be working with it. And of course, it would not be nice for me not to mention that working with bodies like Galen Growth or others in Sierra Capitals or Ventures in the US, or as well, Ryan here, without working with all this kind of institution, is extremely, extremely difficult to have the credibility then to be able to partner beyond the pilot with an insurance company.
Yeah. Good advice, I think, there. Thank you for that. Isabella, anything to add to that interesting list of criteria or ways to work with insurers?
Yeah, I think the first point for us, we have generally 3 criteria. So the first, what is the pain point? What you're solving for the customer, right? Mm-hmm. And it has to be a strong value proposition. And it has to be either very important in terms of increasing the frequency of the touch points that we have with the customer, or solving issues that we see in the low frequency but high severity, right? How can we make people's life better when they're not well? So you need to be very clear on what you're solving for and be mature in that solution. If you just have an idea, we'd be very happy to talk to you, but it's hard to move that forward, right? So you have to have a basic product out there to showcase for us. I think the second point is related to that. How does that fit in an insurance perspective? Because oftentimes players come talk to me when we're talking about biomarkers, right? Fantastic things, that they are really fit for pharma. They were doing that for drug discovery, or they're working with providers doing diagnosis or anything like that. And I say, hey, this is very interesting. We can adapt that to insurers, but I cannot get what you have out of your shelf, right? You need to be very open to adapt to a context of an insurer, which is very, very different from pharma, from providers, or players that come from the US and have this Asian mentality. It's not like that in Asia, so you need to adapt your solution for an insurer. And another point that is very important that we take very seriously at AIA is clinically proven. We see some players saying, hey, we're going to partner, I don't know, with genetics for lifestyles. I can tell you if you vitamin D levels, I mean, good, perhaps for marketing, but if this is not clinically proven, if we don't have sufficient comfort that this is good for our customer, we cannot move forward, right? Even though we're not a provider, but we're like, we need to make sure this is safe and proven. So if you get these 3 items right, you're in a good position to talk to us. And yeah, they can talk to you, Matt, so that you introduce them to us.
That's true.
Right?
That's true.
We are federated insurer, as many auto insurers are. So this brings some complexities. If you're in 18 countries, I think that's something that's set up. Sometimes they come talk to us and they think, okay, we're talking to the headquarters, therefore we're going to be implemented in 18 countries like that. Asia, extremely complex. Certain things that we can do in one country cannot do in others. Even when you talk about telemedicine, there's no legislation in some countries. So again, things will be phased, things will be long-term, and that's what we're looking for. We're not simply looking for partners to fill a big slide out of logos. We're looking for partners that we can develop over the long term. So if people are interested, just come talk to us.
Super, great. So just to sum up that, long-term focus, need to really solve for a very clear customer problem, probably need to be quite a mature solution, ideally in the clinically proven, or have some great value points there, and very adaptive to the needs of the insurer. Guys, we're out of time. Thank you so much to our panel. Thank you for giving up your valuable time. I wish you a very successful remainder of 2020, and I look forward to having more conversations with you in the coming months. And with that, I'm going to hand over to Julien.
Yes, thank you very much. I'm going to keep it very short, as I'm aware that we've overrun our time. So huge thank you to our panelists for your very valuable insights. It's great to get the perspective from your industry, your perspective, and of course your tips for entrepreneurs in the space. Next week, slightly different agenda for us. We are running what we call our Deal Factory event in the beginning of the morning. That's an exclusive event for our clients and customers, enabling them to engage with some of the most promising, hot to trot startups that we have identified in the ecosystem, and therefore we are positioning with industry and investors in order to help them scale and get further traction. We're following that. There was a fantastic fireside chat, which I'm really looking forward to moderating, and really trying to prove what Ryan's been telling us, which is COVID actually isn't an excuse to slow down investments. It's actually an excuse to really start getting more data, getting more nimble, getting more agile in how you do investments. And I will be moderating Optum Ventures and Holmus, or more specifically, Nawal from Holmus. Nawal confirmed and signed and announced his $21.5 million investment a few weeks ago, which is Southeast Asia's largest investment in H1 2020, and I'm hugely looking forward to seeing how these guys navigated the storm of COVID to still arrive at an exciting deal for one of Asia's most promising digital health startups. Thank you very much, and looking forward to seeing you all next week.
Thanks a lot.
Thank you.
Thank you, guys.
Thanks, Matt.